This show does not constitute legal advice and is for educational purposes only. We are always available to field questions. However, until you have entered into a written agreement, your communications are not confidential and we are not acting on your behalf. Hi, I'm Sara Holland, a licensed New Hampshire real estate agent, and this is Man vs. Land. Today, my guest is Jennifer McCall. She's the branch sales manager for the Lakes region at Merrimack Mortage. Thanks, Jen. How are you?
I'm great. How are you, Sarah?
Good. Why don't you tell us a little bit about who you are and what you do?
My name's Jennifer McCall. As Sarah said, I'm the branch sales manager in Meredith, New Hampshire for the Lakes region of New Hampshire area for Merrimack Mortage, and we are a direct lender offering all types of home mortgages to consumers in New Hampshire and beyond.
Excellent. So you do go outside of New Hampshire?
Yes.
Great.
Yep,
all those folks with multiple homes, vacation homes within New England?
Yes.
Definitely you could have one lender for all of that.
Yes, we do. We do a lot of that.
Super. So you and I have talked a little bit about kind of hot button issues and things that you really want consumers to know. Why don't you share some of those with us?
Okay, so probably folks know that lending has some challenges potentially, or have heard horror stories from friends or family members about challenges. And so my number one tip to avoid those challenges, those complications, I call them complications, is to get pre-approved in advance. And pre-approved is different than pre-qualified.
Okay.
And that is, I think, where people don't understand there is a difference. Pre-qualification is sort of just a cursory look at your overall financial picture, maybe your credit report. I'm not necessarily collecting documentation, although maybe sometimes, and just sort of getting a sense of where you might stand for financing versus a pre-approval, which requires the documentation that would normally be necessary to obtain a formal approval once you find a property, but you can do it before you've found your new home and get yourselves ready to move.
Great. That's super important to do. It definitely saves a lot of time, especially now when there's low inventory and buyers are out there looking for properties. Lots of buyers are looking at the same property.
Yes.
You want to be ready to go when you do find that one that you like.
Yeah, something like that would definitely put you as a buyer in a stronger position potentially for negotiating with a seller, because you can demonstrate that you've gone the extra mile. You actually have an approval from your lender versus a pre-qualification. So you're sort of in a stronger position and can move more quickly because you've gotten that initial step in the process out of the way.
Now, what sort of documents are required in getting that pre-approval?
It's a little different depending on each individual scenario, but generally speaking, if you are a salaried individual, receive a W-2 at the end of the year, you would need most recent month of pay stubs, and typically the most recent year's federal tax return, and then bank statements, whichever accounts you may be using to draw funds for down payment and closing, and that could be one account, it could be 5 accounts. If you have transfers between accounts, we and lenders will need to see all of those accounts. So if you've got for example, a money market account, and sometimes you transfer funds to your checking, you want to bring both of those statements with you. So you've got your income piece, which is your pay stubs and your W-2. So you've got your assets, which would be your bank statements. And then anything that's specific to you. So if you have non-employment income, such as Social Security, you'd want your Social Security award letter, or child support, you'd want documentation for that. So any other non-employment income documentation would be helpful. And of course, anything that is new. So if you've just opened recent accounts, chances are those do not appear on your credit report. So you want to bring the information. If you've just purchased a new vehicle or opened up a new credit card, bring that information along with you too.
So you're really kind of looking under the hood and seeing exactly what people have going on in their finances. So it's not easy for them to really hide anything from you.
Yes, it's not a good idea anyway.
It's not a good idea, no.
We lenders look into all these things for the benefit of the consumers. We want to make sure that the numbers that we're looking at to qualify people are true and accurate, so that when they take on that new housing payment, it's comfortable, it's where they should be, and they can be worry-free with their budgeting going forward if there are things that we have forgotten or don't uncover, then someone could get in over their head, and we don't want that. So
Right. All for the protection of the consumer, which
Yes.
is, we stress that a lot. And you may love a house that is a little bit above your budget, but sometimes it's better to not move forward with that. Just be comfortable,
Yep.
live, sometimes below your means, just so you guys can get that bigger house later on. So
Yeah, and I like to ask people if they have a target payment as well. I like to ask that first.
Sure.
So we can maybe pre-approve someone for a certain payment, but that doesn't necessarily mean that is a comfortable payment. There are a lot of things that we don't look at. For example, people's extracurriculars, people's lifestyles,
Yeah.
people's children in public schools versus private schools. Those are all things that are lifestyle expenses. And so I like to ask folks, what's your target payment?
Right.
And it's pretty rare if someone doesn't have a target payment.
Yeah.
So I try to work backwards from that and kind of put a scenario together that works for their target payment versus not necessarily what we can approve them for, which may
Right.
be higher.
Yeah. And now it's tax season, so for those folks that are self-employed, it's really important for you to have your taxes completed in order to
Yes.
get pre-approved. So
Yes,
if you're
and
looking
2
at-
years of returns for self-employed individuals.
Great.
If it's past the April deadline, which
Mm-hmm.
it's looming, you probably want to bring the most recent year's return or evidence that you filed an extension. So lots of self-employed folks file extensions. So you want to bring proof of the extension with you if you don't have that most recent return after the deadline coming up in April.
Great. Lots of good information. So let's talk about the different types of loans and kind of what they can span as far as things that you can purchase with a mortgage.
Well, there are lots of options for loans, and I liken it to one of those surveys that you might take in a magazine.
Sure.
If you like chocolate, go down this road. If you like vanilla, go down this road. It's kind of how we have to look at it.
Sure.
We have, the potential home buyer here, and then we kind of veer off to the right path based on their down payment requirements, based on the type of property that they're looking to buy, based on whether or not they have gift funds coming into play. So there's lots of variables. And we ultimately find the best loan for folks based on all of that. And then there's the property approval, and that's kind of the second piece, as you mentioned. And the guidelines for approving a property are fairly similar across the board from loan product to loan product, with some differences. But in a nutshell, a property has to be safe, structurally sound. It has to be fully functioning, so all systems of the home functioning. So those are the big ones. If it's safe, structurally sound, and all systems functioning,
Yep.
it's probably good to go for financing.
Excellent. And so the exclusions there would be, like, sometimes homes are listed as foreclosures. They're closed up for the winter. That happens a lot in New Hampshire.
Yep.
So those may not qualify for these programs because their systems are not working at the time. So,
Yeah, that's a good point. This time of year, foreclosures tend to be winterized.
Yep.
And so normally we need to have those de-winterized in order to ensure that all the systems of the home are functioning
Sure.
properly.
Yep.
So that can be a negotiating point between
Yep.
the seller and buyer.
Yep, absolutely. Absolutely. So again, back to, you had mentioned with the pre-approval piece and the different types of payments that you could have, it's all consumer protection.
Yes.
The home that you're looking at buying and what qualifies, that's making sure that it's safe for the consumer as well, because you don't want to be paying more than what you can afford in a house that needs a lot of repairs, and you're just really not in a good situation.
Right.
So, yeah. As much as we like to dream, sometimes it's nice to have somebody have our back and tell us no. So, what are some other, other messages that you want to get out to consumers?
I think that another really important piece of the puzzle is, being prepared ahead of time. That's number one. I can't say that enough, obviously. And also, partnering with a lender that you can trust and that you feel comfortable working with. Sometimes the process is, months long, and you can be dealing with your lender almost daily for that period of time. And so it's really important to work with someone who you can trust, who you can reach, who you can feel comfortable asking questions of, who has a good relationship with your real estate agent so that they can work well together. It's kind of a team effort when it comes to home buying. So I think that's a really important message too.
Excellent. We've had some, like the TRID rules that have come down in the last couple of years. How does that affect disclosures, the pre-qualification or pre-approval process, all the way through kind of towards the end at closing time?
So TRID was legislation that came about actually in 2015, and it is 100% based on consumer protection. That's the whole premise of the rule, and lenders have had to change a few things about how they do business, primarily timeline related. For consumers, and one of the big pieces is once you find your property and provide certain key pieces of information to your lender, that lender has 3 business days to disclose your loan terms to you. And they can change because you may not have locked in your loan at that point, things like that, but at least get you our best estimate of your purchase scenario within that 3 business day time frame. And then at the end of the process, we provide a closing disclosure, which replaced what used to be the HUD settlement statement, and that has to be provided to the consumer 3 business days prior to the closing. So you have to sort of tack on some time at the end for that to happen. So, pre-TRID, you could receive your closing disclosure and close the same day. That can't happen today because we have that 3-day waiting period, which is required by federal guidelines. So
and that can't change.
Right.
So as much as you are really excited and want to move into your house and close early, we have to wait a little bit.
And we still may be able to close early. And again, that goes back to my number one tip is the pre-approval process.
Sure.
You can still, with some lenders close in 30, 35, 40 days, especially if you've already gone through the underwriting process before you found the property. So if you're in a hurry, that's even all the more reason to go ahead and do that.
Yeah, and that could be a great negotiating point too. If you're dealing with multiple offers, which we're seeing a lot now because there's not a ton of inventory. So a lot of buyers are buying for the same properties.
Yes.
So you want to make your offer as clean as you can, and that being pre-approved with a lender and having a very clear time frame is very helpful.
It goes for sellers too, Sarah.
Yeah.
If you're a seller, you have your house on the market or thinking of listing your house for sale, it's not too early to start talking to your lender about what your next home purchase will look like.
Perfect.
Because that could happen. You could list, especially this time of year where the inventory is low, you could list your home for sale and your awesome realtor gets it sold in 30 days and
where do you go?
So it's for sellers and buyers both.
Yeah, absolutely. Do you have any other tips for sellers too?
Yeah, sure. Yeah, there's lots of tips for sellers. It depends on sort of what type of property you're marketing, and that's something you might want to chat with your realtor about, of course. But if your home is probably the type of home that would attract first-time home buyers, a lot of times those folks are looking for assistance with closing costs from the seller. So just kind of having your bottom line in mind, or maybe even offering those seller-paid closing costs up front, could make your house more attractive to those buyers who know they're going to need some assistance. A lot of the first-time home buyers that I see are well qualified for the monthly payments, and they've got some savings, but maybe not quite all of the savings that they need for the down payment and the closing costs and taxes. So they really rely on those seller-paid closing costs to get them in the door.
Can you expand a little bit on the seller-paid closing costs? Because sometimes they're called different things, and they look different depending on what type of, if you're doing 100% financing or whatnot. So, if you can explain that a little bit.
Yeah, so again, having a good relationship with your realtor and your lender is going to help you set yourself apart and, be prepared. And depending on what type of financing the potential buyer is looking for, the percentage that the seller can assist with is going to be different. So most programs will allow at least a 3% assistance.
Okay.
So that might be a good place to start, and it's based on the sale price, so 3% of the sale price.
Okay.
Some of the government loans will allow the sellers to contribute more than 3% of the sales price. It's different from program to program.
Right.
So FHA would be 6%, VA would be 4%.
Sure.
But 3% is a good starting point because most of the programs will allow at least the 3%.
Okay. Great. Can a buyer receive a gift for those proceeds? Do they have to have their own funds aside from seller concessions or contributions?
Yep, gift funds, again, really depends on the different programs because there are different requirements. But in most cases, a gift is allowed, again, depending on the program. The gift giver, or the donor as we call it, typically has to be an immediate family member.
Okay.
There are some exceptions to that, again, based on the program. But a gift from mom or dad or grandma, grandpa,
Okay.
you know, that's allowed in most cases and often does happen for first-time buyers, which is great.
Great. Now, first-time home buyers, do you recommend, or is there any required education for them?
Again, depending on the program, there may be.
Sure.
Not for most of the programs, although it definitely can't hurt, and there's lots of great online education.
Yep.
One of the things that came about with TRID that we referenced earlier is each potential homeowner, or each buyer, each applicant will receive a list of the 10 nearest housing counseling agencies.
Okay.
So if you want housing counseling, you can get it, and we show you where to go for that.
Sure.
But there are a handful of exceptions. We don't require it for all programs, but there are a few that do require the education.
And it's more information, so why not?
Yeah.
Yeah.
Yep, it's all good.
Yep.
Knowledge is power.
Yeah, absolutely. Any other strange little intricacies that you wanted to share or that have come up, or funny stories?
Oh my goodness, we probably don't have enough time for all the funny stories I could tell, but you know, I think that I hear a lot of stories from folks who have gone through the home buying process, or sometimes the refinancing process as well, and just have a horrible experience. You know, they have horrible stories. It's taken too long. You know, they've been asked for too many things, and I hate to hear that because it really isn't how it should be, and it can be easier than all those horror stories that you're probably hearing from your friends and family too. And for as many of those that I hear, there are just as many, you know, really happy. I closed early, everything went smoothly, and that's really how it should be. So, you know, if you're working with a realtor who you have a relationship with and whom you trust, obviously, you know, look to them for recommendations for lenders, because they've obviously seen, you know, various lenders and how things can go, and it's just, you know, there's no reason to have a bad experience. So trust your team, work with a team that you do trust and feel comfortable with. And
absolutely, and be prepared.
And be prepared.
Yeah, doing that pre-approval up front gives you time to get all those documents together, instead of, you know, last minute, we need this, you're at work, you know, you don't have time, you don't know where you filed it. So I definitely agree that it's definitely worth a buyer's time to get pre-approved, and a seller.
Yes, exactly. And there's lots of other stuff to worry about during the home buying process. You're packing, you're coordinating movers, you may be relocating.
Absolutely.
You've got utilities to switch over, you know, so getting this part out of the way up front just kind of frees you up for all those other little details that are coming your way.
Right. Now, is there a time frame in which the pre-approval is good for? Should they keep that in mind?
Yeah, so it really depends on the documentation typically.
Okay.
So for example, pay stubs may only be good for a certain number of days.
Okay.
And as long as nothing's changed with the overall financial picture of a consumer, then the pre-approval really just needs to be refreshed with updated documentation. So if we get pre-approved now and it takes 4 months to find a home. We might ask for some updated pay stubs, maybe an updated bank statement.
Okay.
But again, if nothing's really significantly different with income and assets and things from the initial application, everything should remain in line. The variable there is interest rates, of course.
Right.
We don't know what those are going to do in the meantime, so
Yeah.
you kind of have to keep an eye on that. And typically the pre-approval process will be based on a hypothetical scenario, as best we can guess. Whether that be, your top end of your price range for your purchase or your target payment, which is what we try to do. And we sort of kind of put together a hypothetical purchase scenario that might fit into that box. And so we use an interest rate at the time of pre-approval just to base the numbers from. So I guess this is another really key piece of the process is whether it's pre-approval or pre-qualification, it's the end payment that your lender is pre-approving or pre-qualifying you for, not necessarily a purchase price.
Okay.
Because that purchase price can have a very different total monthly payment, especially in New Hampshire from town to town, because taxes can vary
Sure.
greatly.
Yeah.
So you might have a home with a $150,000 purchase price in one town and that same purchase price in another town, and the taxes could be $200 a month different
Right.
from property
That's a
to property.
really great point. Absolutely. Figuring out what you're comfortable with your payment and really looking at where it is that you're moving to, because that taxes they fluctuate, just miles apart.
Yeah.
So it's really important that you take that into account.
Yep. So I try to keep people focused on the payment that you've been approved for and
Sure.
not necessarily the purchase price.
Okay.
And so the variables like the rate may change and the taxes may change. So
Sure.
we kind of have to keep coming back to that payment and making sure that, the houses that you're finding are going to result in that same monthly payment.
Right. Now, with the TRID rules, I know that lenders kind of went, oh my gosh, we're like tightening the reins. There's only so much that we can do. At what point do you want the actual property that this person is going to purchase? Like, when do you want that information? And this is just from like a realtor's curiosity. Because sometimes I've heard lenders say, I don't want, until you have a purchase contract, I don't want to see the property because it starts this timeline and I don't really know.
Well, the rule was put in place to be a tool for consumers to use
Sure.
and actually in shopping for a mortgage.
Okay.
So if you are looking at, tons of different homes and you're just kind of seeing what payments might look like, that's different than, hey, I found the house.
Right.
I'm making an offer.
Right, okay.
Once you narrow it down to that one home,
Sure.
and it looks like that's the home it's going to be,
Yep.
that's really when that lender should be providing
Okay.
the loan
disclosures and-
estimate.
yeah,
Yes,
okay.
exactly. Yep.
Okay.
So if the answer is as soon as you know,
Okay.
is when I want to know.
Okay.
Yeah.
Great.
But
so
if you're
they're
just out there
still
looking,
shopping and they're trying to decide between towns and tax rates and different style houses and price points, then they can still kind of run through all of that through you, and you
Yep.
guys can work that out.
yeah, and I don't necessarily need the property address in those cases. Just
Sure.
hey, I found a house that's $175,000 and the taxes are $3,500 a year. What does that look like? Does that work?
Okay.
Does that fit into the payment we talked about?
Sure.
That's the kind of thing that having that pre-approval already in place is helpful for. And also, you have that relationship with the lender and you can just let them know, hey, what about this one or what about that one? It doesn't mean that you've necessarily chosen that house.
Sure.
And you may have 10 on the list.
Right.
But we can certainly look at payments and what they might look like based on those properties. But it's when you've narrowed it down to the one that you're zeroing in on,
Yeah.
that's when probably that disclosure requirement timeframe starts to
Great.
kick in.
Good. Awesome. Well, anything else that's like burning that you need to get out there?
Yeah, I mean, the things that we run into this time of year, I guess if you want to talk about a timely topic is
Sure.
as we talked about, the winterization.
Yep.
And also the tax deadline. So
Yeah.
a lot of folks are just filing.
Yep.
And if you're self-employed, you know, it could take 6 weeks for the IRS to process that return and for that income to be usable for lending. So the time frame right now gets a little tricky with the tax time, but it's also a really good time because there are a lot of people out there getting refunds, and that's a great source of down payment and closing costs. So we see both ends of that this time of year. We see people who just got their refund, and that's just the little extra they needed to kind of get them where they need to be. And we also see the folks who might be you know, filing their 2016 returns to meet that 2-year average for self-employment that most lenders are looking for. So if you have a question about that, talk to your lender, you know, about whatever your specific situation is relative to the tax deadline looming and whether there's anything you should know.
Good. That's great advice. Yeah. Well, thank you so much for joining me.
Thanks for having me.
I appreciate it.
Yeah.
Again, Jennifer McCall, Merrimack Mortgage, Branch Sales Manager, Lakes Region.
Thanks, Sarah.
And I'm Sara Holland with a licensed real estate broker in the state of New Hampshire. And this is Man vs. Land. Thank you, guys.
Thanks.